The Central Bank of Nigeria in the first quarter of 2026 raised an estimated 4.86 trillion naira through the Nigerian Treasury bills as investors hedge against double-digit inflation. Now, this represents a 12.2% decline from the 5.54 trillion naira raised in the first quarter of 2025. Primary market data showed massive interest by investors, with subscriptions reaching 14.84 trillion naira, which is 9.75 trillion naira above the amount offered by the CBN. Now, the World Bank Group says Nigeria should prioritize fuel supply stability and targeted social support, even as it considers long-term reforms to the premium motor spirit market. In its April 2026 Nigeria Development Update released on April 7th, the World Bank included a recommendation on allowing PMS imports. In a clarification, the institution said such reforms must be carefully sequenced to avoid undermining energy security. Now, the federal government has approved the implementation of the 2026 fiscal policy measures, including new tariffs amendments and excise duties on beverages and tobacco products. In a document issued by the Minister of Finance and Coordinating Minister of the Economy, Wale Edun, the government policy introduces supplementary protection measures in line with the ECOWAS Common External Tariff 2022 to 2027. It also includes excise duties on beverages, cigarettes, and tobacco products on the green tax surcharge. Now, Rise Business Analyst Chika Mbonu joins me now to discuss this in a lot more detail. Mr. Chika, good morning. Very well, thank you. And how are you?
Welcome to the new week.
Thank you so much. Same to you.
Before, I see you have so many stories
to talk about today,
but before I go to the stories, let me just put out a public service announcement. My 31st has come and gone. That deadline was for the recapitalization of the banking industry in Nigeria, and CBN made a success of that. That 3 banks, crossed the line, and then also CBN announced that a couple of other banks, because of some legacy, regulatory, and judicial actions, in the process, they've raised money, but the process of resolving those, and then they'll cross the line. I want to put it out to our viewers, because there were things that have been out there in social media, whatever. There's no bank in Nigeria arising from this exercise is under liquidation. No customer. When we talked about this program last time on this, at the station here, I said that this exercise was for strengthening the banking industry. That if you building a bungalow, you don't require strong pillars. But if you're building a 10-story building, which the Nigerian economy is going towards, it requires strong pillars, it requires concrete, it requires iron rods, and the capital, increasing capital is something like that. And that no bank in Nigeria is under liquidation arising from this. And the depositors' monies are very safe in all the banks in Nigeria. You go about doing your business, your ATMs are going to work, your transfers are going to work, your savings accounts are very safe. And I thought I'd just put that ad.
Right, very important.
Because a lot of uninformed people are just going and saying some things.
Yeah, it's very important to put that
let's start with the story on the
federal government.
The tariff.
Okay, the
tariff, yeah. Just like we do in this program also, we'll try to help to expand the knowledge of our viewers. A tariff is like a tax that is imposed by the government of Nigeria on goods that are imported into the country. Rarely do they put tariffs on exports, but mostly on imports. Usually supervised by Nigerian Customs Service under the direction of the Federal Ministry of Finance, Central Bank guidelines, and stuff like that. Now, why I'm trying to do this is so that I can tie it into the specific initiatives and things that have been announced based on that policy. What could be the reasons for tariff? Why does government put tariffs in place? One of the main things the government put reasons is that government generates revenue from tariff. That's one of the main reasons. The other one also could be that it required to protect Nigerian local industries. Because if you have the higher tariffs, it means that imports are more expensive and industries in Nigeria are going to be protected. And then also the other things is Nigeria belongs to the ECOWAS Treaty, African Continental Free Trade Area Agreement, and all these things have frameworks for tariffs, and it's important that we align our policies towards those ones. And so in this case, all this while, Nigeria has been pushing for protection of the local industries. And so a lot of tariffs have been very high. Now, remember, our economy has been, struggling. So the government is trying now to push for growth. They're trying to push for growth. And so what they've done substantially is to reduce the tariff in a lot of items, starting from motor vehicles. We know the importance of logistics in our country. Motor vehicles, logistical costs, translates immediately into inflation and on goods and services. So if those duties are reduced, it's hoping that it will translate to lower cost of transportation. But the flip side, as I said always, when you're doing tariff is, if you reduce tariff on imported cars, what happened to the local those who produce vehicles locally? And that's where you always strike a balance on that. And so you have the consequences of those. So if you look at items that they have reduced the tariffs, there are all those towards promoting growth. The manufacturing sector have been complaining about since the cost of raw materials, which are imported, the cost of the office equipment they require in their factories also. So those tariffs have also been reduced so that manufacturers can be very competitive. Raw materials come in cheaply, the equipment they require come in cheaply, and then hopefully translate to lower costs and then help in managing inflation. So the government is using indirect way now to manage inflation from the cost side. So this part of the policy why government is doing this.
We also saw it extend to food items as well.
Exactly, also because we complain about food items because of the fact that it's always good to produce what you eat in your country, but as I said, there's a balance that we should reduce your hunger. Remember, food cost translates immediately into inflation. Remember, in Nigeria, the major driver of inflation for a long time has been food inflation. So the policy is therefore is that let's make those things cheaper. Let's support. If the duties are lower, more importation will come into the country. Supply will be more, and hopefully price will drop, and things will become more affordable to the citizens of the country. Since we have been complaining since about it, that inflation will continue to further drop down to single digits as the government wants that to happen.
All right, it's certainly very welcome. I guess the question really would be, is this a shift towards longer-term structural reforms or just mainly short-term economic relief? If we can maybe talk about that.
We have to survive in the short term to live in the long term.
Certainly,
So, the Nigerians have to survive. They have in the short term to live in the long term. But I said there's always a balance between promoting local production and allowing imports to come into the country.
All right. Baby steps, always great to start somewhere. But hopefully this will result in longer structural reforms. Let's look next at the World Bank's clarification of petrol import recommendation. What really should we know about this?
That was an interesting story when it came out. And because we have been celebrating one of the major industrial breakthroughs in our country in the last how many years, which is the Dangote refinery. And everybody has seen let's put price aside, but everybody has seen the importance of playing local in your refinery production. You can see that throughout the Christmas period, which normally, you will see a lot of long queues. Nigeria these days, you just enter your filling station and buy your petrol. It almost feels strange. Yeah, very strange, very strange. We didn't see queue, so that's the advantage we've had. Again, if you look at the balance of payment, our reserves and so many, it has that salutary impact on almost all the elements in our economy. And so now World Bank comes and says, no, we should start importing fuel again. It didn't sound very well. It didn't sound very well. Even if there were some pluses in it, it didn't sound very well in the ears of a lot of people. And so the blowback was a lot. And so the World Bank, I didn't say they reversed themselves. The issue was that they took a step back and took a breath and said, okay, let's just soften our stance and look at that. And then the advice came at a very tough time in the global energy industry in the world, because what's happening. every country in the world is looking for where to get petrol. A lot of countries in Africa actually suspended work, told people to not stop coming to work because of the cost of petrol. Literally every country in the world had rise in their cost of production or cost of transportation because of petrol. And so there was scarcity in the world supply. And then you're saying we should allow importation to come into our country. That was why they, took a step back and said, no, let's focus on energy stability first. World Bank is always pushing for free market. So they are saying that we cannot really ban importation of fuel while we're promoting our Dangote refinery. And I'm just praying that Boa's refinery comes quickly. It's like being an only child. Dangote is like an only child now. So every time everybody calls Dangote's name for everything about petrol now. I guess when Boa comes in now, you'll be calling Dangote and Boa. But everything about petrol now is Dangote refinery. So we believe that the World Bank took a step back and said, let's focus on stability first before free market. And that's basically that. Based on
a softened stance on it, but there's still a strong emphasis on a phased PMS reform as opposed to immediate implementation.
So let it be phased.
Right.
At the same time, let's moderate the price. I mean, depending on where you look at, where you analyze, there's some reports that say that the imported fuel lands cheaper by about 10-12% than the Dangote petrol. That's the push for this. If you're pushing for a free market, if you're pushing for cheaper fuel for the nation. But remember that once we start doing importation, we are subject to the vagaries of what's happening in the whole world now. Whereas we have stability with our refinery here. So all has to be done to promote and support the Dangote refinery. Remember, I've been complaining also that they have this Naira for crude for Naira program where they get crude in Naira, and I began complaining that I've not been getting enough cargoes to process in the refinery. I mean, there have been issue of whether it's 8 cargoes. I think the name the Dangote refinery MD came in here in our studio to talk about that program. So that's another thing, that the fact that Dangote goes out to go and look for crude internationally to come and process in Nigeria, to come and sell in Nigeria in Naira is another issue. I hope that once our production increases in Nigeria, crude production increases in Nigeria, they will have the supply they require to produce product, but to require the stability, and we've seen the advantages of that. Wherever other countries are complaining about scarcity, our refinery is here. We don't have queues in our filling station. We have supply 24/7, and that's the advantage of playing home with our own refinery.
Absolutely, quite a number of moving parts internally, and it's great to see them juxtapose that and then adjust accordingly. Let's look next at the CBN's Q1 NCB issuance. What is this raised amount? So we're talking 4.86 trillion naira. What does this indicate about the liquidity conditions in the economy?
It's interesting because it just tells you there's so much money in our system, because based on the report, what CBN wanted was in excess of about 15 trillion, and so they tell you the liquidity in the system is massive. But the flip side is this, Abby, should this money be chasing treasury bills, or should this money go to the real sectors of the economy?
That's a good
to
one.
lend to SMEs, to lend to manufacturing companies? Why would all this money be chasing treasury bills, really? Whereas a lot of SMEs and businesses are complaining they can't get loans from the banks. So that's the balance, the question that we need to unlock for the industry. But the government needs the money. It's funding deficit budget. It gets money from there. CBN needs to suck away money from the system to manage inflation and then manage exchange rates, because Naira most times in Nigeria chases dollars. So if you don't suck it out, you're going to put pressure on the exchange rate. So there's a lot of liquidity in the system. But the question, Abia, as I tell you on this program, is should that money be chasing treasury bills? I
mean, it is a very important and legitimate question, because, what we could also say, what are the implications for borrowing costs and private sector growth, given the rise in treasury bills rates?
Because, you see, the treasury bills at 91 days says 16%. So, it tells you, therefore, that if government can borrow at 16%, It means individuals, SMEs cannot borrow below.
Yes.
You can't go outside, lend to me at 10%. So the interest rate in the economy is still hanging up there. So if you add the risk premium on top of the 16%, you can understand why then the exchange rate, the interest rate in Nigeria is still, for SMEs especially, not the class A companies, is still very, very, very high. You know, but I mean, so there's a balance. In managing the economy, it's not always one side. You require that interest rate to be also high. So the portfolio investors who bring in their dollars into Nigeria are incentivized to be able to continue to do that. If the interest rate is low, it becomes less attractive for them. And then that can affect our dollar-naira exchange rate and balance.
So it's certainly quite a bit of a seesaw situation here, and some very important questions there, and we have to keep asking them.
Yeah.
If you joined us midway, I have been chatting with Arise Business Analyst Chika Mbonu. As always, Mr. Chika, always a pleasure to have you. We see you again tomorrow, I hope.
Thank you.
All right, then.